Hello traders, it's 8 a.m. Chicago time on May Day, the 1st of May 2019. Thanks for joining me again today on our 1506th show. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, bullish. So we've got a market that has popped up on Apple News, although phone sales have hit a record low, and the overnight session carried that forward. Hot mic, okay, thanks for letting me know. Not sure why that is. How about now? Good mic? I don't know why Windows changes the settings. I have no idea. Should be better now. Test. Still. Is it still distorted? All right. If I blew out your speakers, send it to care of CME Group, 20 West to 20 South Wacker Drive. Send your bills out there. The sound is still distorted. That is very odd. Still hot. Okay. All right. Bear with me a second. Let me look at what has changed. This is not fun. It's hard for me to test this every time. Oh my God, it's turned all the way up. This is the problem. It should be at 60%. Windows did this. All right. Should be better. Mic ghosts. Fuzzy and loud. It should be better at this point. I don't want to talk if it's still terrible. All right. So this morning, risk on sentiment. One thing you need to be aware of is Europe is closed for May Day holiday. So volume was pretty good, though. Even though the European markets are closed. But we did drift up. We ended up yesterday in the S&P with a double top at 2951.50. And then we pushed the all-time high, which was at 2956 in the S&Ps. So risk on very clearly. Just ignore what your quote board says for the European products. The main product, the big leader today is the NASDAQ, as you would expect, up 46.5 points or 0.6%. And then followed by the Dow. The Dow's up 65 points or 0.24%. The laggard, of course, as you would expect, is the SIBO Volatility Index Futures, down to 14.25 points. And crude oil's off again at 63.46. And so that's where we stand. Gold is off, but interestingly, the dollar's off too. Remember, today's FOMC day, expecting the announcement at 1 Central, 2 Eastern. POTUS was trying to influence that decision. He wants them to cut to stimulate the economy more, and we'll see what Fed's Powell does today. So that's where we stand. We have risk on sentiment today. So let's take a look at what's on deck for today. So we got ADP this morning, which is the payroll processing company that used to much better predict what the unemployment numbers, the non-farm payroll numbers would look like. But they've been way off. The ADP change today came out for April, came out at 275,000. The consensus is 180. 1 second. The consensus was 180. 275 is quite a push, and it'd be interesting to see how that translates to Friday's non-farm payroll numbers. Remember, this was used as a predictor for that. We do have a number 15 minutes after the open, market manufacturing PMI, which is a low impact figure. Construction spending at so 9:45 is manufacturing PMI. At 10 Eastern, we have manufacturing employment and ISM manufacturing, as well as construction spending and ISM manufacturing PMI. We have crude oil at 10:30 Eastern and the Fed decision at 2 p.m. So that's what's on deck for today, and those things that may interrupt our auction. Let's take a look at what we expected yesterday in our review segment. Yesterday, here's the expectation. This is from yesterday's recording. Everybody has access to all of these recordings on the YouTube channel. The expectation, well, the ideal, yesterday would have been a pushback up into the prior range towards 45 and an impulse down that would give us a really good bite into a trade short into 29.25, that stock zone. The alternative was for the market to drop quickly into the key 35 area, bounce back up into the range, get tangled up at 45 at the prior point of control, and start moving towards 47 or higher. Here's what actually happened. What actually happened was both. We did not push in to the prior range. We opened in range, but we had somewhat of a drive down on the open. So it was immediately caution longs. We pushed right into that 35. I've talked about this 34, 35 area over the last couple of days a lot. There's a lot of price action around this level. And we did get a good bounce up into 29.40, and then we had this news event that took place right here about 10 Central, 11 Eastern, that the U.S. will not accept anything but a total deal for their demands. Market responded poorly to that and dropped quickly through the 29, which was our target for scenario 1, and pushed into the next stock zone down, which was 29.25. And 26 is in that zone there. And then what ensued was really a tough read in that we pushed higher into a key. There's a confluence of areas of interest here at the 32 to 35. So the short set up there, and it just squeezed and squeezed and squeezed and squeezed until we went neutral. We went neutral by taking out the initial balance high, the first hour's high, and we tested right up to the 45 point of control, consolidated, this is scenario 2 now. Remember scenario 2 where it consolidates at the point of control? Let me show you that for a second. See that? Scenario 2 consolidates at the point of control right there. That's what we got. And then we ended up pulling back almost to that 42 area, and then boom, it took off. And we finished with in the S&P is a double top at 51.50 on the dot. We also ended up with a neutral extreme up day type. The area below 35 was completely rejected. This is what we call an excess low. Didn't look like it at the time, of course, but the market was not interested in revisiting this area. So the market would normally consolidate, come back, test at least a portion of this before starting to rise. And that was the trade setup short that failed with scale-ins. That a full stop out, no scale outs at all before it squeezed higher. It's just the nature of the market that we lose some. We hopefully win more, but we lose some. So the way we finished, the auction was interrupted, and we ended up with a neutral extreme up day, which is very bullish on an excess low at the bottom. What we see here is buy the dip type trading. We went back to the scene of the crime of the news on China, and we exceeded that, and we ended up just continuing to drift overnight. The low overnight's 52, point of control 57.5 overnight, and the high 61.25. Remember, the all-time high in this product is 29.56. We've managed to take out the all-time high, and as many of you have probably read and seen, many people on FinTwit and many blogs and so on have been talking about how the market is showing exhaustion, and we are likely to push down into the 2500s to correct. And those folks, unfortunately, are wrong here. So what has the S&P done on new all-time highs? I don't have a chart to, well, I could pull up a composite to show you what that looks like, but in general, what we've done, we've pushed all-time highs, is we've consolidated for a day and we've pulled back into the range, which is very, very normal for an auction. When an auction pushes all-time highs, it tends to get a response, pulls back into the range. This is where we start to look for buyers again. So we found our sellers, we start to fall, and then we look for buyers, and then we end up dipping as far as we need to entice buyers to come in, those who have missed the run generally and are looking for a cheaper price to get in. Okay? And so there are a ton of bears, at least on Twitter, if not many of the bigger financial blogs, that have been leading people into selling calls and buying puts and all of that. And those are, of course, buying puts is the risk is the premium. Selling calls is really painful because the risk on that trade and naked calls sold in options, the risk on that is what? Infinity. It just could take your whole account out. Okay. Not recommended that you trade that way. Anyway, so that's what we have. Yesterday's volume was really good, 1.24 million. Remember, traditionally, although it's been light since the beginning of the year, Although it's been light since the beginning of the year, the volume has traditionally been 1.1 million contracts. In the pit session in the S&P yesterday, we got 1.24. Check out the day before. The day before, we only got 768,000. So yesterday, the participation for a long day or for a bull day, that volume is really good. And when volume supports price, we get continuation, and that's what we have overnight. What does the overnight session look like? Here it is. The overnight session, we get the pop on Apple and other earnings. Okay, we got a quick pop to 56.50. That was done in pretty much a single sweep. I have it. I'll show you that on CT Bookmap. 1 second. Here, let's zoom into this a little bit. This is basically the futures closing. So these are Chicago times. Pit closes. Apple comes out at 3:30. At 3:30. The futures open at 3:30 right here, and they close again at 4. And you could see that this Apple news was one massive stop run. That's what that is. So we have all of the volume. What is going on here? We have all of the volume sweeping up to 56.50, and then the rest of it just sits sideways. It just goes sideways for the rest of the session until the Asian market kicks in. The Asian market takes that news and starts walking it up. So as I zoom out, see that consolidation? It's basically Apple pushed us up, and we flagged, and then the Asian market starts to come in and push us up. Not seeing much liquidity on either side. And then as we zoom out for the day, to look at the entire session and to look at the liquidity above and below, we see that because we're in all-time high territory, we see that just market makers are active above and below, and there isn't anything special to glean from the order flow at the moment. Sellers are more active as of right now. You could see that right here in the overnight session. We've pushed to 61 and a quarter, pulled back. The pullback was very, very shallow. We could not even pull back to mid here. Another attempt at the high comes up short by 3 ticks. And then what we have is a corrective structure that now is below the point of control, mid and VWAP, and heading towards the scene of the crime for Apple, which is basically the open at 52. And the overall profile is very boxy overnight. There is consensus, but the consensus is very structured between 55 and 60, and we are pushing that 55 down. Now, word of caution, we are outside of any price that we have previously auctioned in the S&P, which leaves us with no profile, no reference points, nothing. And so in that situation, I start to use measured moves. So I'm looking at measured moves. And in fact, I'm not going to lie, I need to update these because a lot of structure has come in since then. And these need to be updated. But overall, there's nothing to refer to in the prior auction. So we are these stock zones that I have up here for convergent trading members are built on prior structures, the prior structures statistical projections using measured moves. Okay, so use these with caution if you're a convergent member. They're not based on price action. They're not based on volume profiles, traditional support resistance, or stats other than projected targets. So these are not areas to lean against short. These are more targeted areas when you use measured moves. Okay, so that's the review portion. Let's get into what we expect for today. What are we expecting this morning? This morning we're in a gap up. Guess what we expect? Because we are auctioneers, we expect the market, given the point of control, the mid VWAP are above. We expect some resistance and some entanglement up there. I'm looking for it to try to push higher, but I'm looking for responsive selling back towards 47 this morning. I expect it back in the range. I'm looking for it to base and then pull back out and finish higher today to continue that extreme neutral extreme close. This is, of course, before the FOMC. The FOMC today may be interesting. There's political pressure to reduce rates. Right? We have elections next year here in the U.S. and the economy is the biggest part of any election. So, from there, we could squeeze higher if the Fed surprises in a bullish way, and then we could squeeze lower and hold sideways if it does not raise rates and it still holds this patient quote-unquote stance, then we are likely to flutter and hold the scene of the crime and hold the same price continuously for the rest of the session. Okay, but macro traders are going to be watching today, and macro traders are going to act today based on what comes out. They're going to act in the dollar and gold and the treasuries, and that's changing the cost of money, and that's likely to impact equities. The secondary scenario is immediately responsive, pushes back into the range if we do, and we get a good base. So I'm looking for this as we push down. I'm looking for a good base to be developed. If we have an impulse up, then I'll only be trading from the long side and aiming for 59.60 in that situation before the Fed comes out, and then we're at the same spot where could go up, could go down. It's anybody's call. I'm not expecting the Fed today to move us around a lot. I expect some volatility, a flutter on the announcement, and then maybe some response during the press conference, but I'm really not expecting, 30 points of range or anything like that. I'll leave you with those two ideas. Remember, we're in new all-time high territory. We're in a gap. So something to really pay attention to, and I know it's getting long now, is how does the market respond to the gap? Is it a gap and go situation, which means there's initiative buying in this situation? If there is, don't be an idiot and go look for places to sell it. We're at all-time highs, and you might in the back of your mind say, hey, this has gone too far, and sell it, which is great for everybody else who's buying. But if we gap and respond, we have an opportunity still to get long, better prices, unless it gaps, pushes higher, and then impulses down. I'm not interested in the short side. Why am I trading short? So this is what I'm looking for. I'm looking for to really show me failure to the buy side to put on shorts. Otherwise, really, it's like 2/3 of the opportunity is to the long side. So be wise and go with what the market gives you versus what you think or what some FinTwit says. Good luck today, and I'll catch you tomorrow. Take care.